them on the Q&A. You'll see the chat option, and then we will keep tracking them. And for maybe based on the time, if we're not able to go through all of them, we will still later try to respond to all of those via email or other platforms that you. Maybe when you do, also just tell us what company you are from and categories of furniture that you are manufacturing, so that we have a clear picture of who had joined us today. So with that, we want to welcome you to the finance webinar. We want you to take as much information as possible, and we hope it will be beneficial to your business and going forward. Thank you very much. We will then move to the next session, where we start with the presentation from the DTIC, which will look at the agro-processing support scheme, which is in-house, and we'll talk about how this is relevant for the furniture manufacturing sector. Thank you. Over to you, Benisi.
Thank you very much. My name is Bernice Clasher. I am from the Department of Trade and Industry and Competition, sorry. We are administering incentives to assist companies in the furniture manufacturing industry. So today we're going to be looking at the agro-processing support scheme that is administering an incentive to assist the furniture manufacturers. I'm just trying to share this document. Okay. Welcome to the agro-processing support scheme. The contents of this presentation, it's the background, the objective of APSS, the description of the program, targeted sectors, mandatory conditions, grant offering, qualifying assets and non-qualifying costs, and then also our contact details. Okay, in terms of the background, the sector plays a very important role in promoting economic participation. It also creates a backward linkages with support sectors and forward linkages with downstream industries. And then also encourages a value chain approach to value addition and agro-processing. And that's why it will also it encourages the injection of new entrepreneurial dynamism. Okay, the objectives of the agro-processing support scheme is to stimulate investment by South African agro-processing enterprises. The investment should demonstrate that it will achieve some of the following: increased capacity, employment creation, modernized machinery and equipment, competitiveness and productivity improvement, and broadening participation. The program basically involves a wide range of processing, which is basically focused on post-harvest activities that result in value addition, enhanced storage life, and in the forestry chain, a value chain may also include sawing, pulping, peeling, and preservation. The targeted sectors that the incentive looks at is food and beverage, furniture manufacturing, fiber processing, feed production, fertilizer production, and essential oil production. Mandatory conditions. Applicants need to be a registered legal entity in South Africa in terms of the Companies Act. They must be a good taxpayer in good standing, be involved in starting a new agro-processing beneficiation operation, or in expanding or upgrading an existing agro-processing beneficiation operation. They must be in compliance in terms of the code and achieve a level between 1 and 4. And they need to submit a valid BE certificate of compliance or an affidavit. Mandatory conditions. The project needs to undertake an investment project which should result in retaining or creating direct employment. It must indicate that the project will be able to boost the local capacity of identified products or where possible prospects of exportation orientation. It must adhere to sectoral minimum wage and all other legislative requirements governing the sector. One of the important issues is in terms of the inputs. It must demonstrate that at least 50% of the inputs, which is raw materials, will be sourced from South African suppliers, and that at least 30% of these inputs will be sourced from Black South African suppliers. In particular, and or government departments, state-owned entities, or similar government institutions. Where inputs cannot be sourced locally, 100% Black-owned and managed applicants may source within the African continent. And then also based on merit, furniture applicants will be considered irrespective of them not meeting section 4.1.8 of the guidelines. The commencement date of the project or activities applied for must take place within 90 days after the application has been approved. Okay, the scheme offers a reimbursable grant of between 20% up to 30% cost sharing grant to a maximum of 20 million rand. 20% for projects that have a qualifying investment of 10 million and 30% for projects that have a qualifying investment of below 10 million. The grant period is over a 2-year period, and the last claim submitted must be within 6 months after the final milestone. We also look at the economic benefit criteria. For these, this mostly refers to expansion projects. So if you have an expansion project and you meet all of this criteria, you may qualify for an additional 10% grant over and above the 20% or the 30%. Qualifying assets and investment costs. The incentive is based on a cost sharing incentive. And the qualifying investment that we look at is new machinery and equipment, new commercial vehicles, buildings, and competitiveness improvement costs. Non-qualifying costs would refer to land, staff wages, passenger vehicles, VAT and finance charges on assets, rates and taxes, costs incurred before submission of an application, increase in investment cost as a result of exchange rate fluctuations, and submitted after acknowledgement of the application or claim, and also beers and spirits. Eligibility criteria: an applicant must submit a completed application form and business plan with detailed agro-processing activities, budget plans, and projected income statement and balance sheet for a period of at least 3 years for the project. For existing entities, submit latest financial statements. The approved entity may not reduce the base year employment. Any reduction in the total number of employees over the duration of the incentive will disqualify the applicant. Any claims not yet evaluated or paid will immediately lapse, and no obligation will accrue to the DTI on such a claim. Disbursements will be made as per the approved milestones and will be based on actual costs incurred and performance criteria being met. And then also after approval, all of the assets applied for will be provincial pending the DTI inspection. So we'll send out an inspector, and then also it will be based on the claim assessment. All claims payments are subject to availability of funds. Okay, and then if anybody wishes to contact us, the email address is incentives@dtic.gov.za, and the customer contact centre is 0861 843 384, and our website is dti.gov.za. And that brings us to the end of this presentation. Thank you.
Thank you, Bernice. I hope you have noted key points or questions from that presentation that Bernice just gave us on agro-processing support scheme. We will right away move to the next presentation by Sifa, and over to you, Dawn. Thank you. Bernice, you can stop sharing.
Thank you, Program Director, and good morning, everyone. Before I proceed, just confirm if you can see my presentation.
Yeah, we can see that.
No, thank you. So, swiftly moving on, my name is Dawn Mashele from SIFA. Let me also say that we will share the presentation, so I won't talk to the slides bullet per bullet. I'll just quickly run through the key points. So this slide, what we're trying to share here is, as you're aware that in this webinar, the other DFIs, Development Financial Institutions, we've got the NEF, we've got IDC, Masisizane, I don't know the DFI, but playing in the space. But the reason we're sharing this slide so that we know exactly how we differ, you know, and where we belong. So SIFA, we are an implementing agency of the Department of Small Business Development. Under the department, there are two implementing agencies, ourselves, SIFA and SIDA. What we do, our mandate primarily is access to finance, development finance, and SIDA provides non-financial support. So anything non-financial is done by our sister organization, SIDA. So this is more like a busy slide, but what we are trying to share here is we do quite a number of things at SIFA, but what's relevant for today, as the program director did indicate, is for those businesses that are in the manufacturing space, furniture manufacturing in particular. So we provide funding through what we call a direct lending channel. Direct lending channel meaning that we provide funding directly to SMMEs. We also have a wholesale channel. The wholesale channel, that's where we work with intermediaries. And these are organizations that are in the business of providing some form of funding to SMMEs. We do that through our wholesale lending channel. We also provide guarantees to private sector lenders like commercial banks and others. And we've got a very small portfolio of properties. But like I said, what's relevant for today is our direct lending channel, where we provide funding up to a maximum of 15 million rand, most of our programs. We can provide funding if you want to start a business as a greenfield, or you want to expand an existing business, or you want to acquire a business. So we play in those stages. The first part of my presentation, I just want to share the instruments that we have. We only provide debt funding as CIFA. We don't have equity. We don't have grants. We do have some programs where we combine a grant and a loan called blended finance instruments. I'll share those later. But the direct lending products that we have, are like your normal vanilla type products that you'll find in a commercial bank. The first instrument that I want to share is the asset finance. So through this instrument, we are able to support a business either to purchase an asset. Here, an asset, we're talking about an asset that can be identifiable by way of, it could be a registration number or a serial number. It could be equipment, it could be machinery, it could be vehicles. We can use this this instrument to acquire such assets. We've got another instrument called the term loan instrument. The term loan instrument, we use this for other forms of movable assets. It's different from this asset finance because here we're talking about general form of assets like your furniture, your fittings, any form of a general movable asset. We use the term loan instrument, and also through this instrument we can assist businesses to support working capital requirements. The other instrument that we do have is called a bridging loan or contract financing. Some of our clients come with contracts where they've got a contract and you're looking for working capital to service that particular contract, and we use the bridging loan or contract financing for that requirement. The other instrument is called the revolving credit loan. Here, it's more like an overdraft kind of a facility, if you like. Some of the clients that we have, you might find that you've got a contract. Probably the contract is, if I put an example there, the duration of the contract, maybe it's 3 years, so to speak. And within that contract, let's say the maximum rent value of the contract, I'm just giving a figure there, is 20 million. But within that contract, you will be getting multiple orders or purchase orders. So what we do, we'll evaluate the whole contract. And then as and when you get purchase orders or orders from your off-takers, then we do this revolving credit kind of a facility. So we don't want each time you've got an order, you make a fresh application at CIFA. So that's what we use this instrument for. So those are the direct lending instruments. Now, eligibility criteria, who's eligible to apply for CIFA funding? One, we're talking here natural persons. You have to be a South African citizen or a naturalized citizen with a valid ID document. That is the first requirement. For companies, juristic persons, it must be a PTY or a CC or a partnership, but it has to be a registered kind of an entity. The other thing that we do require is that the business that we support must operate within the country. We don't support businesses that operate outside South Africa. It doesn't mean though that you can't export. Remember, exporting is different. It's just that your market or your clients happen to be offshore, but your business must be registered within the country. The other requirement is that controlling interest, which is 50% plus one, has to be held by South African citizens. When it comes to employment, is that we also require that 95% of the employees that work in your company have to be South African. Again, we also require that at least one member, if it's a CC, or one shareholder, if it's a company, have to be operationally involved in a business. So we cannot support a business where you're doing this on a part-time basis. You need to be operationally involved in that. And then we're a DFI, we've got developmental impact outcomes that we expect from a business. So we check those kind of things, like, job creation, addressing or targeting certain priority target groups like youth, women, entrepreneurs with disabilities, and so on and so on. The issue of sustainability is that we provide funding, debt funding, it's not grants, so we do some affordability testing, which then means that the business that we support have to be commercially viable. Exclusions, there are certain things that we don't do, and I won't dwell on this slide because, yeah, it's you guys are in the furniture manufacturing business, so it's not an exclusion. But just to share is that we don't do, if it's speculative real estate, you're under debt review, or you're insolvent, you're never rehabilitated, under business rescue or under liquidation, we can support. You manufacture and sell arms and ammunition, we don't do that. You're selling those products that attract what is called sin taxes, you know, tobacco, alcohol, and so on. We don't do that. Labor broking activities. We're 100% subsidiary of the IDC. The IDC have got what they call a delinquent register. If you are in that register, unfortunately, won't be able to support. And again, if you are listed by National Treasury under their database of restricted suppliers, again, we won't be able to support. When it comes to acquisitions, you know, if it's a loss-making business that you want to acquire, you need to give us a strong turnaround plan to say how you're going to turn around that business. Without that, we won't be able to support. So those are exclusions. So let me swiftly move on into the programs that we have. We've got a number of programs, and programs here we mean those blended finance instruments that we have put together to address certain specific markets. The first one I would like to share is called the Township and Rural Entrepreneurship Program. So here we're talking about those businesses that operate in township and rural areas. It can be for any form of a business. We were able to provide funding. The maximum that we provide under this instrument or this program it's 1 million rand. So you're operating in a township or a rural area, we provide funding up to a million rand. It's a blended finance instrument whereby 50% of what you're looking for will be a grant, and the other 50% will provide a loan at 5% fixed. So we just also give you examples there that at the lower end of the threshold, if you're looking for 100,000 as an example, 50,000 of that is a grant, 50,000 of that is a loan at 5%. At the top end of the threshold, you're looking for R1 million. Remember, I said that half, 50% of what you're looking for will be a grant up to a maximum of 100,000. So if you're looking for the maximum of R1 million, 100,000 of that will be a grant, and then 900,000 will be a loan at 5%. Repayment for those type of businesses is 36 months. Like I said, we charge interest at only 5%. You know, we don't say prime plus the margin of risk. And we do provide some moratorium holiday on interest or capital, depending on the financing or the structure of that particular business. If it's required, we do that. It's not like we have to do it for all types of businesses. The criteria here, it's very, very standard, similar to the criteria that I shared. But the main difference here is two things. One is it must be a business that operates in a township or rural area. When it comes to employment, here we are saying at least 70% of employees have to be South African. And because we're talking about businesses in township and rural areas here, we do check the issues of compliance, you know, the bylaws. You need to comply with the bylaws to register with SARS, UIF, and have, you know, separate your banking account from your personal affairs. What we found is that most of these businesses operating in the spaces in the township and rural areas, because these are small businesses, you know, the issue of separating your bank account from personal to business bank account, you know, people just take it for granted. So we encourage our clients to do that. And that support is provided. If they're not in that space, that support is provided through our sister organization, SIDA. The next program that I would like to share is called Amavulandlela Funding Scheme. So this project, this scheme is targeted at those entrepreneurs with disabilities. Here we provide funding up to our CFA maximum of 15 million rand. Like I said before, we don't fund above 15 million rand. So the thresholds here, it's 50,000 minimum, and then 15 million rand being the maximum. Here we provide funding at prime less 5%. We don't have a grant here, it's a simple loan, but the interest rate that we charge is prime plus 5, and we do provide business development support. The business development support can be in 2 phases. It can be pre-loan support, where we can assist these businesses for feasibility study, putting together a business plan. We provide a grant for that, and the grant that we provide is up to 5% of the loan amount, the maximum being 75,000. So if you believe it's a solid business case that you are proposing and you need some form of assistance in terms of feasibility study or business plan, we can assist through this grant funding. We also provide mentorship up to 350,000 maximum. That is the budget that we allocate for this kind of businesses for post-loan mentorship. And again, this is a grant because there's more business development support that we will provide, and it's for those entrepreneurs with disabilities. The one that will be even more relevant for the webinar this morning is what we call the Small Enterprise Manufacturing Support Program. So this is a partnership we have also with dtic, where we provide support for those businesses in the manufacturing sector. Here we're talking about the type of financial support to purchase machinery or equipment, working capital, product accreditation, certification, and testing. The maximum here is 15 million rands. It's a blended finance instrument, a combination of a loan and a grant. And how this works in this case is that 20% of what you're looking for will be a grant up to a maximum of 2 million rands. So the grant is capped at 2 million rands. The loan part, we only charge prime. So it can be prime again, plus a margin of risk. We charge prime interest rate. The repayment period, we've been stretching it further to about 84 months. Normally, most of our programs, the repayment, it will be 5 years, 60 months. PEP, like I said, is 36 months. But for this one, the Small Enterprise Manufacturing Support Program, the repayment, it's 84 months. So this is the instrument, like I said, very relevant for the discussion this morning, targeted at businesses in the manufacturing space. Requirements, again, needs to be registered with CIPC, 100% owned by South Africans, South African citizens. The business must at least be 2 years in operation. But we also say that if it's a greenfield, if it's a new business, it needs to have very strong letters of intent or offtake agreement. Because remember, we're talking about furniture manufacturing, which it's more business to business type of transactions. And then in terms of ownership, 51% black owned, as well as 51% managed. Black managed at 51%, but registered with SARS, UIF, in terms of compliance in that space. So that is the instrument on the manufacturing sector, targeted businesses in the manufacturing space. The last program I'd like to share is the Youth Challenge Fund. This is for those businesses that are owned and managed by young people, by youth. Here we've got what we call 2 channels. The one channel, we're looking at those businesses in the technology and innovation space. You are a young person, you're operating in the space of technology and innovation, you'll belong here under this red channel. Outside of that, it will be the blue channel where we support any form of a business. Again, when you think in terms of furniture manufacturing, it will fall under the blue channel. So in terms of startups under the Youth Challenge Fund, the maximum that we provide is 2 million rand. So if you are a startup, it's a greenfield, we don't provide anything above 2 million rand. 2 million is the maximum. And if you're in the technology space, being the red channel, the grant portion becomes 40%. But if you're in the blue channel, any form of a sector, the grant portion now becomes 30%. The loan part, we only charge 5%. So again, it's not prime plus margin of risk. We only charge 5%. So those are businesses that are starting up. If it's an expansion, you're expanding a business, the threshold, the maximum, it's 15 million rands. And then the grant portion, whether red channel or blue channel, the grant portion is the same, it's 20%. And the loan portion is 80%, charged at 5%. So this program is targeted at those businesses owned and managed by the youth. The eligibility criteria are very similar. The difference, though, is that it's targeted at youth, which is 18 to 35 years. So that is that. In terms of where we're at, the footprint, we are a national DFI, so we are in all provinces. Our offices will be in the main cities in the province. For instance, when you think in terms of Limpopo, for instance, our office will be in Polokwane. But what we then do is we do collocate, with our sister organization and other strategic partners, but the main one being CEDA. Remember, CEDA has got offices in all municipalities. So we'll collocate with CEDA. Our contact details, our website is that. But what is crucial is that how do you apply for CFA funding? We've got an online application portal. So if you visit our website, you can apply online. You click and apply for finance. There is a pre-screening portal. So that portal, what it will do is not like a digitized application form. It's a portal that will pre-screen your business, ask questions about your business. And what the portal is checking issues like your eligibility. Remember, I shared the slide in terms of eligibility and exclusions. So the portal is built around that to ask you questions about your business. As and when you respond, it will then check if you are eligible to apply for CFA funding. If you are, it will then give you access to a screen or a page where you must upload documents. You upload all the relevant documents. It gives you an application number. Once you've got that application number, then you use it as a reference number to communicate with the regional office. The office will contact you once you've got an application number, but at least it's a digitized kind of an application process. So we don't use application forms anymore. We encourage our potential clients to use the online. In terms of where we are at, if you're looking for maybe assistance, you can dial our switchboard 012-748-9600. Our head office is in Centurion, or you can also maybe follow us on a number of social media platforms, Twitter, Facebook, and LinkedIn. The other one, in closing, is that we also have a dedicated unit that deals with complaints and customer service support. So you might have applied at CFA, you didn't get a response, or maybe the response is slow, you are not happy about any other thing. So we encourage you to drop us an email at complaints@cfa.org.za. There is a team manning that unit, and then they will be in touch with you and assist. So that's the end of my presentation, Program Director, and thank you very much for this opportunity. Thank you.
Thank you, Don. Thank you, Don, so much. I think from that presentation, you can see there's a variety of offerings from CFA. I'm sure you've been placing your business as you were listening. Remember to note your questions on the Q&A as we go along, and then we will raise them when we get to that point after all the presentation have been presented. Our next presentation is from the IDC, Industrial Development Corporation. Nicole, over to you.
Thank you very much, Program Director, and good morning to my colleagues and all the participants. I think my predecessors have done me a disservice in the level and depth of detail, so I might be floundering a bit, but I hope that what we share today is sufficient to get us thinking about what we need to do to change the industry. As my colleague Tsolo alluded to in the beginning, the Furniture Industry Master Plan is a document that's aimed at growing the furniture space. It is a sector that is facing many challenges, historical and current challenges. But what the master plan wants to do is to change the trajectory of that sector. And an enabling tool of that sector is the Furniture Industry Challenge Fund. This is a pool of money that is brought together by the IDC, Industrial Development Corporation, as well as the dtic through their Manufacturing Competitiveness Enhancement Scheme. We have a fund of 400 million that can be used to facilitate growth in the sector. And what this fund, the Furniture Industry Challenge Fund, aims to do is to improve the competitiveness and the ability to supply within the space. We've seen that many companies within the space have gone through some really tough times. Balance sheets have been strained, cash flows have been taken down to an absolute minimum. And what we want to do through the enabling arm of this fund is try and reverse that growth. The fund is targeted at specifically those within the furniture space. And in the furniture space, we include mattress and bedding, upholsteries, case goods, built-in cupboards and kitchen unit manufacturers, and then obviously the normal home furniture, school furniture, and office furniture. Include what we can use the funding for is for investments in capital equipment. We want to see changes in terms of technology, innovation. We want to see those improvements in the capital equipment used. It can be used for working capital on the back of growth in orders from whether it be contract-based or retailers coming to the party. That's what the working capital can be done. And most significantly, one of the areas that we really want the fund to impact is on process and system improvement. This has been a space that has been so challenged with negativity in the market that we haven't really spent enough time or money on developing processes and systems that make us more viable. So that is one of the areas that the fund is looking to improve on. In terms of qualifying companies or qualifying criteria, the two biggest elements of what qualifies an application for this funding is sustainability and economic merit. When we talk about sustainability, it's not just financial sustainability, but are we doing the right investments to ensure that we're socially sustainable in terms of compliance to minimum wage rates? Are we doing enough to make sure that we're environmentally sustainable with moving the business towards more sustainable manufacturing mechanisms? When we look at economic merit, can the business afford to actually repay the funding that is being advanced to it? The big challenge that we have seen in the market is that it is a sector that is categorized by family-owned businesses, which is great because that is a continuation of skill set and stakeholder handovers. So what we're trying to encourage through this process is an element of transformation. But we also understand that transformation is not an immediate result of funding. So we allow the businesses 36 months to put into place any transformational plans that will get them to a broad-based BEE level 4 within 36 months of approval. How the fund works is that we have a minimum funding of $1 million and a maximum of 40 million per company. And this is where we co-leverage with my colleagues at CIFA and other DFIs. We fill the gap between the SMME and the growth elements and larger business. And we try not to cannibalize, if I can use the word, the efforts of our fellow DFIs. So we look at from $1 million up to 40 million. It's a 50% split in the facility. 50% of it is, let me just start off by saying 100, it is all debt funding, which speaks to the economic merit and feasibility of the transaction. Of the loan, 50% of it is at 0% interest and 50% of it is at prime less 0.2. What we have tried to develop is the entire value chain approach. So we have a localization incentive there. If within a period of time you can vouch or you can validate to us that 50% of your inputs, at least 50% of your inputs are from local suppliers, there is a grant conversion of up to 2 million rand. So this in a nutshell is what the Furniture Industry Challenge Fund is about and what it seeks to achieve. Please do apply to us if you meet these criteria, or if you want any more information, please feel free to reach out to us. Our contact details are as they are on the screen, and you'd find a lot of information on our website as well. I'd leave it to that because I know there has been a fair amount of advertising on the fund, and I'll leave it to questions as we proceed through the rest of the seminar. So thank you very much, Program Director. I hand back to you. Thank you.
Thank you, Nicole. I think as I've earlier noted, I said when you listen, just be mindful of how you place your your company in terms of what's being presented. You will see it's different for different sizes of institutions. So when you listen, be mindful of the thresholds and the qualifying criteria as we go along. We'll take the next presentation from National Empowerment Fund. Over to you, Kyle.
Thank you, Program Director. Good morning, colleagues. Good morning, participants. My name is Kyle Sibia, Investment Principal, National Empowerment Fund. National Empowerment Fund is a DFI, Development Finance Institution, reporting to the Department of Trade, Industry and Competition. Our main mandate from the rest of the DFIs within the South African space is that of supporting BEE. So our focus is on supporting Black-owned institutions and Black empowered institutions. And what that really means is ownership and not necessarily just, the BEE rating certificate. We fund between 250,000 all the way up to 75 million rands. So as indicated that our mandate is on Black economic empowerment. So we are looking for Black-owned businesses, which means at least 50% plus one of ownership by Black people. We are looking for ownership and ownership management, which means the owners of the business, preferably Black owners of the business, are involved in the day-to-day management of the business itself and have management control. We do have a strong favor of Black women empowerment. We create jobs. We are looking for growth, especially in rural areas and townships. And obviously, we are also looking for commercial viability. We are structured into 4 main funds. The first one being Imbewu, which funds from 250,000 rands all the way to 15 million. The second one is Rural and Community Development Fund, which focuses on investments in rural areas as well as townships. So it promotes investments in rural areas and townships. That fund funds between 1 million and all the way to 50 million. We have Umnoto Fund, which funds a number of initiatives, including venture capital acquisitions, project finance expansions. And that fund looks at investments between 2 million and all the way to 75 million. And then lastly, but not least, strategic project funds, which really assesses early stage investments all the way to 75 million as well. Our main facilities are loan facilities, and we support term loans, which means, especially if we are buying equipment, we then are able to utilize term loans in supporting those funding requests. We also have revolving facilities, which is mainly for working capital, especially seasonal and short term. And then we have suspensive loan facilities, which supports specifically, the acquisition of specific assets, business assets, may be structured as suspensive loan facilities. We do support acquisitions where Black businesses are purchasing businesses, especially from unempowered shareholders. We do support that. And we can look at other equity instruments also to ensure that the business is fully supported. In terms of our application process, obviously we go through, pre-investment, where you actually send through your application, we screen, we give you feedback. If it progresses forward, it goes to a forum and we get a green light to go and do an extensive investigation on your business, which is due diligence stage. And then once the team is happy with that process, we go all the way to committees. And once committees give us a green light, we then go to legal agreements and then finally disbursements. In terms of the furniture fund, so the fund size is 50 million. We are limited to a maximum of 5 million per applicant. The fund term is about 84 months. And in terms of interest, we are allowed to set interest between 0% and 5%. Obviously, you must be a South African entity in terms of the South African Companies Act and other related company-related acts. You must be a taxpayer in good standing. You must either create new jobs or at least save existing jobs going into the future. We are promoting, South African economic growth. And so we require that at least your raw materials must be sourced locally, but where there are instances where you can't source raw materials locally, you just provide that supporting document, and we are happy to consider that. We fund obviously provided all our NAF requirements are met. In terms of products, we fund really across a number of products in the furniture space. And these are some of the examples I've given, but these are not, we are not limited only to these products. So as long as your products fall within the category of being furniture, whether there is school furniture, storage units, mattresses, base components, and other furniture-related products. In terms of information, so you can also read, I think we'll share the presentation. So these are the initial documents that we would require in terms of existing businesses, but also we support startup businesses. We are available across the country in all 9 provinces. So if you are in other provinces and not necessarily in Gauteng, you can go to one of our offices and inquire about the furniture fund, as well as other NAF products. Thank you, Program Director. These are our contact details. Thank you.
Thank you so much, Kaile. Remember also, as per our request on the chat, maybe also remember to tell us who your company is and what category of furniture, or what are you doing, what your product is as a company joining us today, so we have a better idea of who's on call. We now moving to the next presentation. We will take presentation from Tina from Old Mutual. Thanks.
Thank you, Solo. Am I audible?
Loud and
I
clear.
can see. Oh, perfect. Thank you. Good morning, everyone. My name is Tina Sibuse from Masisizane Fund, which is an initiative of Old Mutual. So Masisizane Fund was founded in 2007. So we play in the enterprise development space. We are a private, as Ntate Don alluded, we are a private DFI. So we essentially do what your NEF is, SIFA, and the others do, but we are from a private element, right? So our mandate is really around financing Black-owned businesses. We were established with the sole purpose of ensuring that Black-owned businesses participate in your broader economic sectors, right? So with that, we've also been very intentional in saying there are certain demographics still within Black-owned businesses that have been previously disadvantaged or that have to work extra hard to make sure that they get access either to finance or access to business opportunities. So we've been very intentional in looking at your youth-owned businesses, your women-owned businesses, and businesses that are owned by people living with disability, right? So we finance across, we finance even male-owned businesses, right? But we're just very also intentional in ensuring that these demographics are not left behind as we seek to transform the business landscape or the SME landscape, right? So with the rural areas, we're also very intentional in looking at your rural areas or businesses that are operational in your rural areas, your township areas as well, where they would typically not have access to the facilities or not know how they could potentially access platforms like these, or platforms where they can have access to finance, right? So how we look at SMEs that come into our space, you can either be one or the other, right? Is someone moving the slide? No? Okay. Okay, so when we look at the different applications that come through or different SMEs that we interact with, right? You can be either one of the two. I'm not sure why, but my slides are moving quite haphazardly without me. Okay, so you can either be a developmental client or SME, meaning that you've been operational for less than 5 years. Your business operations are either in your rural areas, your township area, or your peri-urban, as you would call it. And these businesses are usually owner managed. So the owner would typically be fully involved in the day-to-day operation, and it's usually managed by one shareholder. And then with these businesses, we find that there's still some form of hand-holding or business support that is required, right? And with those kind of businesses across the sectors, we finance up to 10 million. But where the need arises, we can look at considering it above 10 million. And then you get a client who we call a commercial client, right? Or that we classify as a commercial client. This is an SME that has been operational for more than 5 years. You know what you're doing. Your market knows you. You know how to navigate the complex business environment in terms of getting support, getting your market, expanding your markets as well. So with those ones, they can operate anywhere within the country. And with your management, it's not a requirement that they are fully involved. So sometimes you find it's one of the branches, or there's a head office, and then you have different branches within different regions. So with that, we don't really expect full involvement from the management, right? And this business support that is required here is very much minimal to non-existent, right? Because they know what they're doing, they've wrapped their heads around how they navigate their value chain. And with these ones, we can look at financing up to 20 million. So these limits are not essentially not cast in stone. We can review them, or we can actually also look at partnering with other industry players like your CFAs or your NEFs. We do reach out to them to try and see how we can go in a co-funding agreement to ensure that the SME gets access to the capital that is required. And then when you look at pricing and funding instruments, right? So pricing is, we don't use a blanket approach when we price our applications, but we do use a couple of categories or certain characteristics that we look at that influence the risk profile, right, of your application. So one, we look at owner contribution or collateral. Obviously, if there is presence of one, it minimizes the risk, and therefore we price it accordingly. But if in the absence of collateral or own contribution, we still can look at the application. It's really not a deal breaker. We look at the experience of the business owners or the management. We want to see that there are expertise within the business to actually carry the business forward, right? And we also look at the nature of the business. Is it some sectors or subsectors within manufacturing itself are more riskier than others, so we try and price it accordingly. And we also look at the developmental impact, which is one of the key reasons why Masisizane also exists, to facilitate that socioeconomic impact within the different communities where the SMEs that we support operate. So we look at how many jobs are you creating, or similar to my colleagues that went before me, we look at how many jobs are you creating, and if it's a store you're opening or a franchise you're bringing in, does it mean you're bringing quality things or better suited products closer to the community, and therefore also creating jobs within that particular community. So with us, we finance from 500,000 up to 20 million, as I said, that will be a maximum. And then we look at financing different things, right? If it's a contract financing that you're looking to support, we do look at that. We look at production facility, very much prevalent in your manufacturing sectors as well, where there's that production cycle, and then you get to sell the products, and then you start realizing the income from that. So we do look at that also in your agriculture space. We finance working capital. We do look at financing assets as well. And we also do look at quasi-equity. So we can do blended finance where if there is a requirement or a need for us to blend our finance with a portion or an element of equity, then we can do a blended debt and equity, but have a clear strategy as to how we do it. So the reason why we do it is to unlock or to ease the burden of cash flow, on your cash flow, or the burden of 100% debt will have on the business, right? And then what we also do, right, is during our assessment process, we look at where there are gaps within the business, right? The business itself, whether it's within the process or within the how you reach your market, how you conduct your business, how you keep records. We look at things like that. And as part of our package, right? So it's debt finance, but it's not just a facility where we say, there's money, go do it. Do you want to do with it? Or what you said you will do with it. But with that, we also put together a package, right? That says, having looked at the business and having looked at the people or the key people within the business, where are the gaps that we can potentially plug in? And that's where we now also extend business support with our investment to say, is there a need to do some capacity building, right? Do we need to take the financial people within the business through financial reporting training, or your business technical and financial management training? We do put those in place. And also very much an important one is really around governance as well. So we do that. And we also do workshops for our clients. We arrange for financial education for the business and everyone that's involved in the business, to say it's very important to know how you manage your money. And it's also very important to understand the importance of having things like succession planning, for example, within your business, or the importance of having a will. It's very important. So we also, as part of that package, we include that. And we also look at where we would have identified the need. We do look at that business support from a mentorship or a coaching aspect, to say maybe there's a need to allocate a mentor or a coach to this business. And we also do facilitate market linkages for the business to ensure that it remains sustainable. We also do business accelerator for the business when it's time to also, if we need now to start scaling up, we do that. And we have a post-investment support or innovative solutions that come with the investment, where if the business needs to scale up, we do link you with the correct people. We walk that journey with the business post-investment to ensure that it's performing where we would have projected the performance. And if there's any lag, we try and remedy that as soon as possible, because what we want to finance are businesses that remain sustainable, businesses that 5 years from now will still be there, still thriving, because at the end of the day, we're looking at the jobs and the livelihoods of people that you employ within your business, right? So we try and we ensure, actually, we don't try, we ensure that we stay with the business to ensure that it's sustainable and it actually grows over time, right? So our lending criteria, it's very much similar to our colleagues that went before. The business must be 51% Black owned. I won't waste time on this one, but the business must be formally registered and follow the regulation that govern that type of structure, right? I'm rushing because this slide is very important, right? So this one is one of the key things that we look at when you send through your application, right? We look at, and you need to demonstrate that these things are in place for you to be at a better chance of getting a finance or getting approved for finance, whether it's with masterplan or with any other funder, right? So we look at your business or strategic plan, right? Is there a strategic intent within the business? Do you understand the aspirations of the business? Are they clearly articulated? And do you have within the business the competencies to actually see that business plan through? Or is there a need for us to support? And where you see that you need support from elsewhere, do you highlight and say, I'm going to rope in a specialist within this? So do you have plans around that? So we want to see that you have given thought to that. We need to see market access or demand. So there has to be some form of commitment from the market, whether it comes in the form of agreements, letters of intent, or within your manufacturing space particularly. It's not, you don't always get contracts, right? But you have, it's relationship based, where you know company XYZ, any given time of the day, every month, without fail, they order 10,000 units. And you know it's relationship based, right? But we need you to demonstrate that there is that component of relationship. We need to see that with your current production capacity, you're actually producing less than what your market requires. So it doesn't make sense for the business to expand at this point. It's one of the things we look at. We look at that commitment from the owners of the business as to how are you spending the proceeds of the business? Are you reinvesting them to make sure that you get to that bigger plan or that strategic intent? And that for investors is a very attractive thing to see in an SME or an entrepreneur reinvesting the proceeds of the finances of the business. We look at compliance, very important. It's an instance, but it's very important. You want to see that you have processes in place and that you adhere to the industry practice or the industry rules, right? Is your plant compliant with industry regulations? We look at things like that. And we look at your financial record keeping. It's very important to keep your financial records and ensure that they are up to scratch. They make sense to you as well as an SME. More than your accountant putting them together, you need to make sense of them as well. And we also look at your proven track record. Whether you start small, you're now ready to maintain and build up the capacity, the production capacity. We need to see that you've done this before. Your customers or your market is happy with the quality that you produce, and the financial performance will obviously speak to that or demonstrate that this is in line with that track record. We can see that there is track record that actually just needs a little bit of finance to make sure that you're able to scale up and meet and reach different markets. And then the last one is really, it can appear to be an obvious one, but it's really it's really something that we're seeing with our SMEs. They're not really they don't really have the hang of it. So these are financial do's and don'ts when it comes to how you conduct your finances or the finance of the business, right? These are some of the things that you can actually look out for. What you need to do is to have a business plan, as I said, craft that business plan and outline who your target market is and what you've done in that and what your competencies are. Maintain accurate financial records. It's very important. We definitely encourage having an accountant, and it actually makes sense to have an accountant. but also have a clear understanding of what is within those financial records. This one it's a tricky one that we see. You think it's obvious, but it's not always obvious, right? Separating your personal and your business finances. So you need to have that segregation, right? To make sure that your accounting processes as well as your tax obligations, that they're very clear. It's simplified, it's easy to see. And we also want to see that you're able to separate the two, right? Have a business account and don't conduct your personal transactions through it. And also at any given point in time, have an understanding of what your cash flow stance is, or where you stand from a cash flow perspective. And also explore different funding options, understand who's who in that funding ecosystem, who does what, so that you know who do you go to and at what point, right? The financial don'ts, it's very important to do financial planning, analyze, and emphasize also the financial planning to analyze, to make sure that they align with the business goals and mitigate and ensure that you're also able to mitigate any potential risk, which also speaks to managing the risk. Do not avoid the tax man. It's a very important one. Make sure that you're tax compliant. Make sure you don't do your impulsive financial decisions, right? There's different phases in the business that you need to follow. So just make sure you don't make impulsive financial decisions, which can be linked to overspending or overcommitting the business as well, or yourself in the personal capacity. So we're operational, or we look at application across the country. And this is how you can reach us. This is our email address at masterplan@allmutual.com. And then we also have a direct WhatsApp line. You can just say, my name is X, I'm looking for this much, my business does this is what we manufacture, and this is what my market looks like, and we'll take it from there. And you can also reach out to us on these social media platforms. Program Director, thank you. I'll hand back to you.
Thank you so much, Tina. Information overload to all of you on call, I'm sure. But I think we would also want to apologize. It has come to my attention that most of you thought the webinar was only starting at 11, and some of you are only joining now, but there is a recording that you can also follow because it's been streaming on Proudly SA, Facebook, and you can also follow some tweets. We apologize for that miscommunication. At this point, then we will take the presentation from Proudly SA themselves. Janine, are you good to go?
Thank you so much. Can you all see and hear me okay?
Loud and clear.
Oh, fantastic. I'm going to share my presentation with you. Just share this out. Hey. Doesn't seem like I'm able to share my sound. No worries. Let me see now. Hey. Okay. I can't share my sound, but perhaps you can share with me if you can see my presentation.
Yes, we can.
Ah, excellent. Thank you. Check. Apologies, everybody. I just want to put it in slide mode. There we go. Thank you very much for the opportunity today, and we're very honored to be hosting this session. I think if I was to sum up where Proudly South African fits into today's conversation, it would really be that we are the access to market partner for our member companies. If I can leave you with that one phrase, and the presentation will be focusing on what we have to offer. So why is it important for there to be a buy local campaign? The country is facing a triple challenge. We all know this: poverty, unemployment, inequality. And Proudly South African has been established to address unemployment. So our tagline to support that is buy local to create jobs. And then we have done a study. So there are some localization naysayers out there, particularly some very prominent journalists. So we thought, let's be cheeky and prove to them that there is really benefit for us to focus on localization, to assess where it is that we can create more jobs and increase the GDP. And we focused on manufacturing in a study that we've done. If it's of interest to you to receive the study, it is on our website, but I'll also be very happy to share it with everybody on the call today. So we looked at manufacturing, and there was a very prominent economist, Dr. Bidian, that did the research for us. And we looked at the where manufacturing lies in terms of its contribution to economic growth. So if you look at the GDP of the country, it's contributing 13% as of 2021, and also contributing 1.4 million jobs also in 2021. So it is a massive contributor to not only our economic growth, but also to employment. Prior to COVID, which I believe everybody's saying BC now, before COVID, we were very honored to work with the DTIC and SAFI to present a sector forum for furniture, and SAFI has continued that endeavor, and every year has been hosting one, which is phenomenal for the industry. So the industry is in good hands, and really have dedicated associations and stakeholders that are really passionate about the industry. So we're very grateful to be working with all these bodies. But as you know, you're in the industry. In 1999, there were 3,500 plants, and in 2020, only 1,100 plants. So really, the industry is almost a third of what it used to be. And similarly, in 2000, there were about 50,000 direct jobs, and given that the number of plants have closed down, only 25,000 jobs as of 2020. So the industry, in terms of the direct jobs it created, halved, in a period of 20 years. We also look at so if the multiplier effect in factories closing, looking at the furniture value chain, it's really phenomenal to see all of the elements that make up one furniture piece. You're looking at textiles and leather. Also, there might be metal parts. It could also be, of course, timber, and also who sells furniture. So you're looking at the wholesale trade, the retail trade, etc. So if there's a disruption in this value chain, it has that multiply effect, and really, affecting industry at large. Because I should imagine that if a factory closes down, so if there's one player in the market that no longer produces a part of a chair, that is important for the other factories to then procure this element of that product, then it makes sense that these factories have closed down, because the trend now is to really import. So it makes sense that if there's a slight disruption in this value chain, it has that effect of really decreasing the size of the industry phenomenally, as showcased in the previous slide. Where do we fit in? So a buy local campaign, it's not just South Africa that has one. Many other countries do have, and it's interesting to note that even countries doing well, better than us economically and employing more people, also have their own interest at heart. They also have their own buy local campaigns or legislation, which unfortunately we don't have. But it is important. Even the United States has a very much a patriotic sense, in that they support their own very actively. So really, it's important for South Africans, those living within the borders, to support our own, because it does, as I've showcased, contribute to economic development and job creation. If you look at jobs now, when you add if you add those of us who are unemployed and those of us who have stopped looking for jobs, that is in the 40%. So almost half of our population is unemployed if you take into account those who are unemployed and those who have stopped looking for jobs. It really is, it's a phenomenal amount. The work that we also do is really to educate the public about the importance of localization. I know a lot of you, if you're a local manufacturer, I'm also speaking to the converted. It's to retain or create jobs and looking at developing skills, empowering, looking at economic development, improving living standards. So I mean, if you do have a job, of course, your spend will dictate your income, really. So it does, there's also a sense of dignity in having a job. So there's an emotive element to the work that we do, not just hard facts of economic data and employment data. So one also needs to think about those elements. Also, infrastructure development. Of course, it makes sense if there is an entrepreneur, budding entrepreneur that has an idea to make a product and to really create demand for it, etc. That he or she needs a factory. So there's infrastructure development in localization, and then of course increase the GDP. But also ultimately, what we want is to export more and import less. That economic study that we did, we looked at what would it mean if there's a 10% investment in manufacturing, and furniture is one of those elements. So we'll make this study available to everybody. We've also explored, agro processing, automotive, etc. But if you take all of those figures together, it talks about a 9% increase in the fiscal revenue that is projected if there's a 10% investment in manufacturing, but also 75,300 jobs can be created in the medium term, which is really, really a staggering number of jobs. So it pays off to localize. As a campaign, our focus area is, so I did make mention before that we're all about access to markets. But what we do is we lobby consumers to buy local, and that's really where the strength of the campaign was when we started, is to lobby consumers to buy local. But now we've also got some tools and initiatives in place to lobby for the public sector to buy local and the private sector. And where it benefits companies to join us as members, we also promote accessibility of locally made products. So if you come on board as a member, the benefit for you would be then to participate in our access to market opportunities available. Because it's all good and well to say, hey, South Africa, buy local. But if they don't know where to source local, then that is, it doesn't make any sense to shout out, buy local, if they don't know where to find locally made products and also services from businesses registered within the country. So who can join the campaign? Really, any organization can. You need to be registered locally, and also you need to adhere to our 4 key criteria. So on the left-hand side of this slide pack, you'll see the Proudly South African member logo. So you'll see the colors of our national flag. That's representative of local content. So come on board as a member, we'll vet you in accordance with local content. So if you've got any questions about that, just to summarize, we assess where your raw material comes from or your components. If we aren't making raw materials locally or those specific components you need to manufacture your product, we take into account where the conversion of that takes place, so or the assembling of that product. So for us, you're creating a factory, you might have to import your components. We understand that. So we look at where the conversion takes place. If it comes down to nuts and bolts, we say that 50% of the final cost of production must take place within the borders of the country. So if there's any questions on that, we'll assess local content in that regard. If you're a services business, how we measure your local content is we ask for information on where you procure. So if you're procuring from local manufacturers, local service providers, that's great. That will be for us your local content. We also assess quality. That is a big fallacy we've had to kill these last couple of years, which we've done some market research, and we are very I'm happy to say that the market research shows that when consumers see the logo, they know it means local content or local company making product locally or providing the service locally, but also the product is of a high quality. So we are really dependent on whatever the regulator of that industry dictates how product must be made. So if you're manufacturing a surgical mask for hospitals or clinics, we'll request your SAPA license. If you've got a factory, we'll request your ISO certificate. Where it's not regulated, and I know this is one of those bone of contentions, to measure quality for the industry, we'll assess your quality management system. We'll also ask for testimonials from businesses that are recent and to follow, are you following processes? That for us is very, very important because we need to uphold the quality management systems, or we want to celebrate, our members that are upholding the quality elements in terms of their membership, but just to showcase that you don't have to have an Italian kitchen or whatever the case might be. We manufacture products in accordance with high quality standards, and I think that's very important for us to uphold. So we'll assess each company that comes on board on a case-by-case basis. We also assess environmental standards and fair labor practices. So with regards to environmental standards, if you've got a factory, we'll ask for your waste management policy, for instance. But really, in essence, what we want to know from you is that you are looking after the environment when you operate. And we'll work with you also on an ad hoc basis in that regard. Also, we determine whether you are treating your employees fairly. We ask for your HR policy so that we can assess whether you are looking after your employees, or your bargaining council certificate. We'll also accept that. We don't want to be associated with sweatshops. So important for us to vet you in accordance with legislation in place currently. And so we vet you in accordance with those 4 key criteria. If you tick the boxes, then you are eligible to become a member of Proudly South African. And we'll also then send you, you'll have to pay for your membership. I'll share that slide with you at the end. But it's not as expensive as one might think. So I just wanted to put your minds at ease. So I did say, where's the benefit of being a member? It's all about access to markets. So what we do in the private sector is we ask companies to give localization commitments. So it could be a retailer. We ask them to award more shelf space to local manufacturers, or it could be that corporates have an ESD program, so enterprise and supply development programs. We ask them to implement local content provisions when they do businesses with, or when they bring ESD companies on board, so that we keep the spend within the borders of the country. It could be that you are buying more locally produced raw material or components. It could be that you're creating a new factory. And it could be that you are actually import replacing, if I can call it that, for your company. So you'll be buying more locally made. You'll be buying product from local manufacturers and service providers. So that could be a localization commitment. So our members have given these, and I think it's in the region of 8 billion rand this year alone, which is phenomenal. So we're asking corporate South Africa, will you commit? And in the past, prior to this year, we have been working with these different industries, asking them to make commitments. So for the banks committed to, there are 2 banks that committed to buying their furniture from local manufacturers, and also buying their uniforms or corporate wear from not only local textile manufacturers, but also making sure they are the CMT is local. So the product is made locally and assembled locally, etc. So various industries have committed to buying local, or one of those other localization commitment pledges we've requested from them, as described earlier. So how do we? I said earlier, it's all good and well to say, hey, buy local, but what we thought to do is, and this we started in COVID. We thought to start a B2B procurement tool. So it is a place where we can load our members as suppliers, and then bring on board corporate South Africa as corporate buyers. So our members can list their products and their details on the site. Corporate South Africa can post their private sector tenders, which will be a nice added benefit so that we know how corporate South Africa is buying. But then also our members' products and services can be rated so that it puts a trust element back into emerging businesses, which unfortunately a lot of corporate South Africa is still very much worried about buying from small businesses. So we put the trust element back by virtue of loading our members on as suppliers. So we do that education in the background also. Also, it really just gives corporates the opportunity to import, replace in their own right and be exposed to new companies that they might not have known existed. But what MAP or the Market Access Platform, this tool also assists with, there's an element of recording a localization commitment pledge from corporate South Africa for them then to measure or manage the progress that they've made in that regard, so that we can measure impact. So it would be wonderful to know at the end of the day, that contract that has been now given to a local manufacturer, how many jobs have been retained or possibly created, etc. So we're very excited for this tool. I'm not going to play the ad for, not the ad, the corporate video. I have asked the team to prepare that for everybody. So this site pack will be going out with the link to the video via YouTube that you can peruse in your own time. It is about a 4-minute video, so I don't want to. Our time, I know, is very short. So we're running out of time. In terms of how we do it, so I've measured. We work with industry, corporate South Africa. We earmark specific products that can be import replaced for corporates, for instance. We identify products. We then do the business matchmaking exercise via the market access platform, and then we encourage the parties then to transact. And there's a way to evaluate and to monitor on the MAP dashboard how companies are doing. But we are working very closely with the Competition Commission. So just to put everybody's minds at ease, and that element of the reporting is voluntary. So it not to worry in terms of we adhering to the laws of the land in that regard. What we also do is we've got wonderful stakeholders. We've cultivated great relationships with the private sectors. So we're looking at the Tourism Business Council of SA. So they're an apex body for the tourism business. So hotels and various other hospitality sectors or companies are included in the Tourism Business Council relationship that we have. There's the Franchise Association, Consumer Goods Council. So they have all the FMCG manufacturers and retailers on board, etc. So we've got great relationships with those bodies, BUSA, etc., BBC, BLSA, all of these companies. We've got a wonderful audience with them, and they're all the big buyers. So we're working with them to create procurement forums so that our members can showcase their goods and tell the story. I think if you know the story of local manufacturers, there's always a sense of a loyalty that's being created because you know the story and you know the impact you have on that business if you buy from them. So that's also an element where we've always been strong at as Proudly South African. We tell the story, and that really, it is one of those elements that really creates the passion in terms of keeping and supporting our own. So we do that type of work also in the background. With the assistance of the DTIC, we also then created our portal for furniture manufacturers. So it really is on our website, there is a portal dedicated to our members. So it really is a listing that is available to members free of charge, that they can list. And it helps because, often when you go to the retailers, you're not sure what is locally produced or not. And sometimes you think that there is a product, maybe you are looking for bar furniture and you don't know if there's a local manufacturer. So it helps to have a database of all the players, the local manufacturers in that industry. So we've got the portals in place for that. The MAP Market Access Platform is a procurement tool. So all of our members in the furniture space on our portal will then also appear on the Market Access Platform, and we'll go to corporates to get support from them there. Then also we have the public sector procurement work that we do. Very quickly, we've got a tender monitoring function in place. So we monitor the previously designated products, so furniture is one of them. We've inputted that into our system. As soon as there's a flag, as soon as a keyword, related to a locally manufactured product in the designated space, as soon as a product or a tender is loaded onto the websites, we monitor 815 websites. We extract that tender, we send it on to two parties, our members, firstly, for them to have first-hand access to tenders that are put out from government, but also then to send to the industrial procurement unit for them to assess which of the entities are still favoring local manufacturers in their tenders. So we're doing some work, in this on the side to also assess who we should target in terms of requesting from entities to include local content provisions in their supply chain management policies. That's for now is the only way that we can that local content can be enforced. Is for entities to include that in their policies, and how it's enforced for now is for the Auditor General to go back to check if they've upheld what they've put in their policies. And to let you know, our CEO is also on the State-Owned Entities Procurement Forum. So we pro-local there, and we are representing our membership base, and there are many of the state-owned entities that are caring about upholding local content provisions and still keeping by the designated space. But we also have some municipalities and metros that have sought our advice, and we're also working with them in terms of upholding local content. We also have an integration with the CSD, which is what this slide is all about. What that means is if our members want to do business with government, they can do so by virtue of their membership. So there's an integration that takes place from our membership base, then to the CSD. And also what is a new initiative is now that our logo and the phrase Proudly South African Company can be utilized on the CSD. It's a new initiative. And so if the entities have put that local content provision into their policy, anybody buying for the state will then have to buy local. So they'll go on the CSD and they can source then local companies, local manufacturers, not middlemen, local manufacturers from that site. So the middlemen will know where to buy in essence. Then also what we're known for is consumer education. We have a new strategy in place. We are targeting e-commerce partners. What we're asking of, and these are the relationships we've secured, but we're asking e-commerce partners to please give preferential rates to member companies. So listing fees, succession fees, fulfillment commission, whatever the case might be, preferential rates. Allow these companies to use the Proudly SA logo and or phrase or description in the on the product list, and then to group the companies together. So there's almost a Proudly SA store on those sites. So we're looking forward to development work being done there. And then we're also working with these companies. So if you look at One Day Only, they've got a subscription base of 3 million South Africans who are buying from their site. So the One Day Only, you'll be bombarded with great deals for One Day Only. We listed one member company and they sold 180 units in one day. It was phenomenal. It was such a quick turnaround. Macro Marketplace is allowing our members who are new to the site to not pay a commission structure on Macro Marketplace. So we're really negotiating for our members on these sites. And there's also wonderful ways for us to get foot traffic onto these sites. So if we've got a Black Friday special, or if there are Black Friday specials, we'll say to South Africa, go and buy our members' products from these e-commerce partners. So we're very excited about this. And then also we are in the process of looking to build our own e-commerce stores. So that will come to fruition, we suspect, in October or November. So please watch the press for more details. And then we also do what we've always done, mall activations, expos. I don't want to take away from this work, but this is work that you know us for. And we're continuing this post-COVID, which is very exciting. So we've got the marketing campaigns in place. And then I'll leave you with our new ad. And I suspect it might not play because I couldn't connect to the sound, but please just indicate if you can't hear the sound. This you'll see on television now. We're very excited. It's all about, the messaging was always support our own. And we previously had President John Carney. He was the president in our ad, where we made the buy local choice a lifestyle decision. From the time you get up till the time you go to bed, you can actually survive on locally made products. And it was an homage to those companies that kept us going when we couldn't import. And this is now the element of legacy. So if we support our own, it means that we are contributing to the future of our country, the next generation. If it's not playing, I'm going to unshare and reshare quickly so that I'd really love to share this ad with you. We'll hear the sound.
No sound.
No sound. Okay. Let me see, share sound. No, it won't allow me to share sound. What we'll do is we'll share this, we'll share the link to the new ad to you. Wait, maybe this will, let me see. Nope, I'm still not coming right. Okay. So I shall ask the team to share the link with you. And in the interest of time, let me see if I can just take you to our fee structure then. So it depends on your annual sales turnover. If you are turning over 5 million Rand or less, the membership fee is 500 Rand, and it increases incrementally to 100,000 Rand excluding VAT per annum, and those are for companies turning over 100 million Rand or more. Previously, the membership fee for the largest tier was 500,000 Rand, so we have reduced the membership fee for companies joining. So that is our presentation, and then we'll be happy to share it with you. Thank you for the opportunity, everybody.
Thank you, Janine. Thank you for the comprehensive presentation on membership and the benefits from being a member. I think we have now reached, we almost at the end of our session. I'm looking at the Q&A side. I see most of the questions have been answered to this point. And we note some of the introduction as I've requested. We have noted some that are still online then, and some comments. Spa, we note your comments. Anonymous, we also note your comment. Noli, Mbali, and Sasana, among other introductions, we have noted them. I don't know if there's any that still needs to be addressed, other than the ones that I think most of them were for SIFA. They have tried to respond to all of the questions, I think, according to what I can see now on the charts. The other one is just asking about the presentation. We have said we will share the presentations with everyone on call. So I think based on what I can see from my side, we have tried to respond to all the queries noted on the Q&A. If not, we will go over them and just revert if we have missed anything. So time is also not on our side. Thank you so much for being patient. I know we've gone over time. This was scheduled for an hour, but we have tried to accommodate also other people who joined at a later stage. We want to thank you so much to making time and being part of this session. Our presentation have been broad. I think you have noted for yourself. We've talked about youth program, benefits for small enterprises, large corporation. We've touched on mentorship, equity, membership, and access to market. And you have met some of the institutions that can be of assistance to your company. Fiber and manufacturing, CETA is also represented in the call. They are important for training in your sector. And I know there are other sectors, not from the furniture side, that have joined the call, but the information is so even relevant for them. So on that note, in closing remarks, I want to thank Proudly SA for providing the platform for us to have this session. And thank you so much to our speakers, Bernice, Dawn, Nicole, Kailicha and Tina, for availing yourself and for the information shared. We thank you for always responding positively when we call. But mostly we want to appreciate our companies, everybody who's on call who made time to come and listen to us. And we hope that you have taken enough from the session to know maybe where you go next to and the contact details so you can continue to talk to us. We also appeal that you be part of the institutions that we've talked to, be part of Proudly SA, be part of South African Furniture Initiative, which is the industry association. That's the only way or most effective way to know what is happening in the sector. It's also a platform for us sharing information from the DTIC side on communicating what we're doing or how you can participate and having a voice in the work that we do. So we thank you all so much. And to all of us as consumers, I want to say, let's support local companies, let's buy local, and let's buy back our jobs. Thank you so much and have a good day further.
Thank you. Bye, everybody.
Thank you. Bye, everyone.
Bye.
Bye.